Hello, and welcome everyone to our Digital Monetary Institute Symposium on Central Banks and Digital Currencies. Today, we're focusing on the next phase of cryptocurrencies, and we're fortunate to have a very distinguished and at the same time, very hands-on panel of experts who are working in this industry. I'm Patricia Haas Cleveland, president of OMFIF US, and I'm very pleased to welcome our guests today. Tom Albright, CEO of Bittrex Global, Monica Long, General Manager, RippleX, Peter Kerstens, Head of Financial Technology Task Force, European Commission, Sydney Schaub, Chief Legal Officer, Gemini, and Henri Arslanian, Global Crypto Leader at PwC. So welcome everyone, and thank you for joining us today.
Thanks for having us.
Before we begin, just a quick note that we will welcome questions from the audience, so please enter them in your chat box and we will turn to them later. To start with, I just want to mention a brief backdrop to our conversation. As we all know, we've seen crypto move from a very side discussion, primarily about Bitcoin, just even a year ago, to front and center recognition as a $2 trillion industry today, with the proliferation of products, the entrance of institutional as well as retail players, and a rapidly growing ecosystem to support it. Many regulators remain leery, but as we've heard from Commissioner Pierce, efforts are underway to provide clarity in a number of jurisdictions. So while recent volatile Bitcoin prices and other crypto prices and the frenzy around Dogecoin could suggest all this is just a fad, it does indeed look like crypto, and most importantly, perhaps its related technologies, are here to stay. So we very much welcome your views from your perspectives. You each bring a unique angle in the industry to comment on how you see the industry today and where do you see it going tomorrow in the next phase. So to start with, I'd like to turn to Tom. Tom, you sit in the middle of the industry, as we said, which is growing rapidly. You oversee a cryptocurrency exchange and digital wallet, which handles 250 currency coins, as well as a number of tokenized stocks. So it'd be great to hear from you, and also your license and operate, just to mention that, in Liechtenstein and Bermuda, so you're outside the United States. And we'd love to hear from you what you see as the most important trends emerging now, both in terms of the products where you see interest and demand, where you see that demand coming from, and do you think that demand is sustainable? Sort of, in other words, where do you see it going based on where it is today? So it's all yours.
Perfect. Well, thank you so much again for having me. Very exciting to be speaking here. So that's certainly a very big question, but I think it really encapsulates what the industry is all about. We're at the very beginning of cryptocurrencies and blockchains going mainstream. You've mentioned institutional interest is rapidly growing, and I think we're just at the start of really seeing this transformative technology go mainstream and continue to grow and grow and grow. So it's incredibly exciting to be a part of that, to watch that, and to be in this industry overall. To be a little bit more specific, where I see blockchain technology and cryptocurrencies having just massive applications across basically the entire financial ecosystem and the entire ways that people use money today and track assets. And there's an application for cryptocurrencies in all of those spaces. And you're just seeing people scratching the surface now. So you mentioned tokenized stocks is one really interesting thing that we're fortunate to be doing. And licensed out of Bermuda to offer those tokenized equities. But what it really does is it brings 4 or 5 billion people who around the world don't have any access to US equities or European equities or traditional stock investing, and allows them to get fractional shares, to access 24/7, and to be able to build their wealth through these new tools. And that's something that we first saw with Bitcoin, and we're seeing that apply now to multiple things. NFTs and decentralized finance are another really, really interesting application of that, where we're seeing art being digitized and sold, and music, and I think that will expand on to real estate and to other individualized assets. And then decentralized finance as well, the products that people are building, again, allowing 4 or 5 billion unbanked people and people without access to the traditional financial system to get access. And then to allow the people that do have access to get that access in a better, cheaper, faster way. So, I think that it's an incredible industry, and we're just at the start of it getting really, really big. And as more and more institutions, more and more retail come in, I think that the growth is just going to explode from here. So very exciting.
So you don't see it as we're at this moment where there's a lot of focus, there's a lot of momentum, but this might die down. If you're just sitting in the US right now and reading the newspapers or listening to Squawk Box and others, it's all you hear about. And so a lot of folks are saying, well, this is just speculation, this is just a short-term fad. But what you're saying is you've seen a sustained growth and an evolution of interest from Bitcoin to other products, and now tokenized stocks. So, and I know we're going to talk and touch on the regulatory aspect later, but to what extent, when you set out your own business model, you decide to work wherever it is you're working, I mean, how much does the regulatory angle affect your ability to be innovative and offer different products?
Oh, it's absolutely huge for us, and that's a great question. So I think the key to, in a lot of ways, to this growth is being able to bring the traditional financial system and all the people who are comfortable participating in that into the blockchain and cryptocurrency ecosystem. And that absolutely can't happen without well thought out and strong regulation that properly addresses the new technology and how it's being used. So we've been incredibly fortunate to be licensed in both Liechtenstein for our exchange, and then in Bermuda as well. And we're seeing regulators like the BMA and the FMA, and I think Moed from the BMA spoke either yesterday or earlier today. But having the foresight to look at this technology, look at the applications, think very hard about how that should apply, how it should be regulated, and how it should interface with the traditional financial system and other products that they regulate. And that's key because it allows people to innovate while still protecting customers. And it gives institutional investors and retail investors and all the participants the confidence that they can enter into the ecosystem and know that there's a regulator out there looking out for them. So we view it as absolutely critical, and we're thrilled that regulators are taking a progressive approach, looking at this, thinking carefully, and understanding that the technology and the ecosystem are going to continue to grow, and that they need to foster that while at the same time protecting participants.
Right. In fact, I know somebody said it was very interesting that the crypto industry is actually the one industry that very much wants to be regulated, because it's the lack of clarity that has created more problems, and that innovators can work with regulations, but they can't work with lack of clarity. So that's a very interesting That's a very interesting point. And I suppose the entrance of institutional players has been a recent development, a more recent development than the retail, but one that presumably you expect to stay?
Absolutely. I do expect that to continue to grow. And we've seen it over the past few years, in all honesty, but it's accelerating, I would say. We're seeing more and more interest. We're seeing more and more people who recognize the power of the technology. They see that this is not going away, whereas I think in 2017 or even earlier, maybe they could dismiss it as a fad. Now we've been through 10 years of the technology. We've been through bull markets and bear markets, and we're seeing use cases continue to grow and continue to get more powerful. So yeah, we're absolutely seeing more and more institutional players come in, and I think that just continues to grow.
That's great. Well, thank you very much for that. Monica, I'd like to turn to you next. Ripple offers, as I understand it, a real-time settlement system. It offers currency exchange and a remittance network. And I just want to roll back a second because I think a lot of the talk in the recent weeks and a lot of the focus has been around crypto almost as an investment asset, as opposed to a currency which has other, or an asset that has other uses. We've heard our Fed chairmen say it's usually primarily for speculative purposes. So there's a lot of focus on it as a sort of digital goal, as I was saying. But actually, as we all know, it really started out with payments in mind, to be an easier, more efficient, faster, cheaper way to offer payments. So you actually at RippleX offer a digital asset which is built for payment. So I'd love to hear from you both your experience with crypto as a payments asset and mechanism, and also I'd love just to hear more about the use cases in general for crypto beyond sort of an investment asset.
Yes, thank you, Patricia. And you're exactly right. You know, Bitcoin was first introduced as a peer-to-peer electronic cash system. And building upon a lot of the themes that Tom laid out in the opening, what crypto really is about when we zoom out is modernizing financial infrastructure so that it's more democratic by design, like the internet, which will yield the benefits of, you know, same as how we exchange information today. Value exchange will become more global and inclusive, greater access for more, and a lot more efficient, you know, making all types of financial transactions a lot faster, cheaper, more competitive, and more transparent. And so taking those key properties, applying them to payments, it's been our experience the past several years where we've worked with hundreds of financial institutions around the world to specifically solve for the inefficiencies in cross-border payments and to provide technology that helps them make their cross-border payments a lot faster, taking settlement from T+3 days down to just minutes or even possibly seconds is what the technology enables. And also making those cross-border transactions more transparent and reliable for their end customers and cheaper. So using the digital asset XRP, which is an open, decentralized, and global public block, sits on a global public blockchain. XRP enables these institutions to, instead of having to pre-fund for global payments to work around the inefficiencies of the outdated system, it enables them to serve liquidity on demand on an individual basis for the transactions. So that cuts costs in about half for those transactions. And in that, you know, making liquidity more competitive so that we don't see, you know, the 5 biggest banks controlling 90+% of the FX markets. And it's to expand from payments, it's a similar story for other fields of finance like lending, where crypto offers the possibility to make securing loans a lot simpler, a lot faster and less expensive because it will become a more competitive playing field. Even beyond just some squarely financial applications, you think about applying blockchain to identity, which is something that's so key for improving inclusion in finance, where I think that's a really exciting application to tokenize identities and make them really empower the individual to own their information and make it portable around the world. And so I would just say to wrap that up, to your point, I think what's most important is the recognition, especially by governments, that crypto has really constructive, productive applications and use cases today, and that's only going to expand. This is a real opportunity to finally make financial infrastructure a lot more inclusive. And so to the points that you and Tom were discussing, having clear regulation is very much wanted by the industry.
Yeah, thank you so much for that. I mean, you make a really interesting point that at the end of the day, a lot of the benefits that in your use cases are coming out is actually for the consumer, almost the individual consumer. Obviously, the institutional players are in there, but faster, cheaper payments, having access to the kinds of liquidity you talked about, and Tom talked about accessing the stock market, you know, with tokenized stocks where you can get access to Tesla, which maybe you can't afford to buy the stock as it is, but you can get fractional access to it. So all of these things kind of point to constructive benefits and use cases that are out there, as opposed to just thinking about, oh my goodness, what does this present? You know, there's all these risks associated with it. So thank you for that. So let me turn to Peter. Peter, for better or for worse, you're the only regulator on the panel, so you may get some tough questions. But on the other hand, you have a very positive story to tell in many ways, because the EU is one of the first jurisdictions to really look at both existing securities and financial laws and saying, you know what, we need something outside these to address the digital asset class because they don't exist. So you're taking the lead and trying to put this together, which is no doubt not an easy task, not just because of the subject matter, but because of all the jurisdictions that you're dealing with and member countries. But you have indeed in September put forward a proposal for, it's called the Markets in Crypto Assets Regulation. I guess you call it MiCA for short. That's out there in the works, open for discussion. So can you tell us a little bit about this? And also, as you go through this process, are you getting, I don't want to say pushback, but are you getting input and feedback, which is really highlighting some of the key issues that you've got to deal with, or some of the key issues that are controversial? And do you have any words of wisdom to share for those jurisdictions who are just at the starting point on this?
Well, on your last point, whether I have words of wisdom, I leave that to others to judge. But really, when we looked at the crypto asset market, it moved from too small to care to too big to ignore. And it's too big to ignore, both from an opportunities point of view, but also from a risk point of view. And as you already indicated, we had a careful look at the market and at our legislation, and we reached the conclusion that while some crypto assets are financial instruments under EU regulation, and if they are financial instruments, they're covered by that regulation, even though that is not without challenges, applying that legislation is not without challenges. The vast majority of crypto assets that currently are on the market and that are coming to the market do not meet the European definition of what is a financial instrument or what is a security, to use US language. And so this entire ecosystem of crypto assets, both from the issuance point of view, but also from the services point of view, was operating in a gray zone, in illegality. And we heeded to the calls to have legal clarity. And that's what our proposal, our MiCA proposal, Marketing Crypto Assets, is about. We want to shed regulatory light and regulatory sunshine on this market, because we see the enormous opportunity this market has, but we also see the risks, and our regulation tries to enable these opportunities while addressing these risks. And there are really two big parts in the regulation. The first part deals with the issuance of crypto assets. We have different kinds of crypto assets. We don't have 25 flavors, but we've really grouped them into three big categories, or even two categories if you wish. One is the general category of crypto assets that are not backed by anything, that have value in their own right. And most crypto assets on the market actually sit in that category. We call them general crypto assets. And then the second category are crypto assets, also some people call them stable coins, that derive their value from referencing some real world asset, either currency or commodities or something else. And so the MiCA sets rules for who can issue them. General crypto assets can really be issued by anyone. Disclosure, essential disclosures that must accompany the issuance. And if you issue asset reference tokens or e-money tokens, those stable coins, you need to have an authorization, or you will need to have an authorization, and you will also need to hold capital and so on. And the issuance of those instruments needs prior approval by the regulator. The second big chapter of the MiCA proposal is about crypto asset services. So not the issuance or the creation of these tokens, but services such as wallet services, trading venue services, brokerage services, portfolio management services, these kind of services. And we create a regime where entities that envisage providing these services on the European market can get licensed for it, they will be subject to authorization requirements, prudential supervision, and the regulation also sets out some market conduct requirements, which we are very confident are easy to meet by the legitimate players that are already out there in the market, because we mirror a bit in these provisions the good practices that we see with legitimate players, but we try to close down the, let's say, less legitimate operators. Mm-hmm. So I don't think that companies that are serious in this business, that are currently providing crypto asset services, will be seriously affected by MiCA, but they will, of course, need to have an authorization, which should be easy enough for them to obtain. Also very important from European perspective is that they will get passporting rights. So if they're authorized in a member state, they can provide their services throughout the European Union. And it's going pretty well. Now, the European legislative process is long and very deliberative. So it usually takes a long time. So normally, from the moment the European Commission proposes something, a legislative proposal, you're looking at a period between 1 and 2 years before it gets finally adopted. And I am confident that we are going to stay well within the 2-year period. So we'll be pretty average. It's very complex. It's a new area for many member states, so they need to get to grips with the issue. But really, the main area of debate is on asset reference tokens and what rights users of or holders of these tokens should have. That really is the biggest issue of debate in the legislative process.
Right. And as you're putting these proposals together and getting feedback, are you consulting a lot with the industry? So the entities and the players that would be regulated to sort of get real-time feedback so that it satisfies your fiduciary responsibilities, but it also enables them to continue to innovate. How is that process working?
Well, we consulted before. We relied also on advice by the European supervisory authorities, ESMA in Paris, European Banking Authority in Paris mainly, who also consulted the industry. We meet with industry players on an ongoing basis, even before we submitted the proposal, but also now. And I must say, many of them have not been shy in coming forward and giving us their input. And we welcome this because it's a complex area. We try to capture the reality of the market and enable and seize the opportunities, but we didn't always get it correct. So the contributions which we're getting are very positive, and they are about how to improve the proposal. So it's not that they come in and say, we are against this and we're against that, and we don't like this proposal at all. They say, look, we understand what you're trying to achieve here, but this provision really, if you formulate it like that, is going to have this or that effect. So maybe you want to formulate it a bit differently. And that is very welcome because ultimately we want a legislation that supports the industry, that supports this market, but that also, of course, addresses the risks that exist in this market.
Right. So maybe this is not a fair question, but I'm just curious, for a lot of regulators, they really are torn between trying to ensure that they maintain the responsibilities for the safety and soundness of the financial system, and also consumer protection. And clearly, a lot of these new innovations are very, in some ways, threatening to traditional finance. So how do you find that balance of kind of wanting to ensure, I suppose, that the system, the traditional system, doesn't go belly up, but that there is innovation, you can allow for these changes? I mean, to what extent do you feel regulators are being held back by the existing traditional sort of 20th century world of finance versus trying to set up the foundation for the 21st century?
Well, we try really hard not to regulate technology as such. And our regulation should allow for any technology that's out there. That's, of course, aspirational. It's not always, we're not always successful in getting there, because the truth of the matter is that the legislator, in adopting legislation, tends to reflect existing technology and sometimes sets the existing technology into regulatory stone. So that's one thing. The other is that when we were preparing this proposal, there was a fair amount of input which we were getting from the regulatory community, who said, well, but this is a good idea to have a legislation on crypto assets because you're going to legitimize crypto assets. And we don't think that is proper. All of this Bitcoin stuff is very shady and dodgy, and we shouldn't really be endorsing this with legislation. But I must say that as the market had its second, or was it third even, sort of revival, we saw it in 2017, 2018, and it then went down quite considerably. And a lot of people said, you shouldn't really treat this too seriously. This was just a bubble, like we've seen other bubbles. But then when the market recovered and really outperformed quite considerably the peak in 2017, 2018, all of this talk that we shouldn't be legitimizing this market went away, and we get no representations of this anymore at all. Now the predominant, actually I would say the universal and unanimous view is that this is a serious market with serious potential that's here to stay and that will benefit from regulation.
Well, that's great. I mean, I think you would probably get a lot of appreciation in the industry for that perspective. So one last question for you. Are there particular risks that keep you up at night that you worry about? Or do you feel like you've really, with this initiative, tried to get your arms around the big items and tackle them?
I sleep like a baby, and I mean, not like a tiny, I sleep very well. Nothing keeps me up at night, and most certainly not Mika. Of course, like in any industry, there's always going to be people that will either deliberately or accidentally try to blow up or will blow up the system. And our regulation is there to anticipate that and to try to prevent this. And I'm pretty confident that the measures which we're putting in place will avoid huge leverage building up or huge risks building up. But it is ultimately, it's an asset class, it's a financial product or a financial-like product, and these products have risks. Many of these crypto assets are very volatile, and so we give no assurances as to the future value. And interesting, for example, one of the requirements in MiCA for the general crypto assets is that also the issuers will not be allowed to make any representations as to the future value or profitability of these crypto assets, because we think that that's just selling snake oil. Only if they can assure that the crypto asset will have a certain value at a certain time, they can make a representation on that. But otherwise, they cannot sell them as get-rich-quick schemes, which some of them, of course, have been doing, and that has been causing some hardship for unsuspecting investors and consumers.
Right, and I know that's a big point of concern in the US, and Commissioner Pierce was actually commenting on that in her remarks a little while ago. Peter, thank you for that. That was a great tour, if brief, about this regulatory initiative, which certainly sounds like it's gotten off to a great start. Sydney, I don't know if you're envious or not sitting in the US, because we have one of the most fragmented and complicated regulatory systems by just the nature of our political structure, I suppose, as a country. But you have a very important role as the Chief Legal Officer of Gemini. So your perspective from sort of the legal and regulatory issues as a practitioner on the ground, I think is very useful. And just as a backdrop, basically, you are a digital currency exchange and custodian operating in the US, Asia, and Europe. As I understand it, you trade and offer custody for 33 cryptocurrencies. And again, it's trading, clearing, custody, wallet. You have your own stable coin. So clearly, you also are very much in the middle of this industry. You're actually, well, let me just back up. I think one of the interesting things is that the founders, the Winklevoss twins, were noted when they founded the company as saying how important regulation was to them, that it was part of their DNA. So clearly this has been a guiding light for you. Now you're regulated by the New York State Department of Finance. You were one of the first Bitcoin-focused financial institutions. You were approved first license of the Ethereum exchange. CBOE uses you. You have your own stable coin. You've navigated this regulatory mouse maze quite well, apparently. But tell us how you're finding the regulatory situation, how it affects innovation, and how, from your perspective, you see it evolving. And we all appreciate that a lot of the new appointees are just landing in their seats in the new administration. A lot of excitement around Gary Gensler being so knowledgeable. But what is your take on this from a practitioner's perspective?
Yeah, thanks very much, Patricia, for that background and for having me on the panel. It's really fun to talk about these issues. They're live, salient issues at the moment. So, so happy to speak about them. And it's always interesting to hear others' experiences, because I think we're all sort of coming at this from slightly different angles. And as you mentioned, Gemini is a global company, but we have a significant presence here in the US and are licensed as a limited purpose trust by the New York Department of Financial Services. And that was actually something that the founders, Cameron and Tyler Winklevoss, wanted to do at the outset. They had this conviction early on that blockchain and crypto assets had massive potential. And but they also understood that, as we said in a marketing campaign that launched 2 years ago, the revolution needs rules. I think a number of panelists speaking with me here today have noted that the crypto industry wants to be regulated because lack of clarity is an issue, and that was absolutely part of the impetus of getting regulated. But we, as a Gemini, as a company, it touches some other areas of and other innovation beyond just financial instruments. Tom and Monica both mentioned other applications, in particular NFTs, non-fungible tokens. And the suite of products that Gemini offers implicates a number of regulators. So I'll just briefly touch on a couple of the others to kind of frame my response to your good question, Patricia, which is, what does the US landscape look like, and what do I anticipate that it will look like in this new administration? So in addition to being exchange, we also offer custody, and we are sort of the gold standard custody solution. For example, we're the custody provider for every Bitcoin and Ethereum exchange traded fund in Canada, and we are a custodian for some closed-end funds and others here in the US, though an ETF has not been approved here in the US yet. We also have a Nifty Gateway, which is one of our affiliates. It's a marketplace to buy and sell digital art. So that's a really interesting application of blockchain and something that the founders were passionate about early on. Admittedly, I didn't fully understand it, but I do understand it now, and I see the potential. I think Tom touched on this, the potential of using blockchain in sort of various ways to, as Monica put it, kind of democratize and modernize the systems to make them more accessible. And that could be in real estate, it could be in trading financial instruments, it could be in accessing and owning art. So that's all very exciting. We have a product called Gemini Earn, which is a lending product where customers can lend their crypto assets that they custody with us to institutional borrowers and earn interest on them. And then we're soon to launch a credit card that has crypto rewards associated with it. So we're really trying to get involved in a lot of aspects of this ecosystem. And obviously many others in the panel have spoken about the global regulatory landscape, so I'll stay focused on the US. And as you mentioned, Patricia, there's currently no sort of like uniform framework that oversees all of crypto. And even if there were, the diversity of product offerings that Gemini puts forth would potentially, we would touch a number of different regulators anyway, but our political system does lead to some fragmentation. So I'll focus mostly on the federal level, though obviously at the state level, we have kind of a patchwork of different regulators that we work with there. And it's really interesting as we're starting to see the Biden administration take shape. We're still waiting to see who will head up the CFTC and the OCC. We're very important regulators for crypto. Obviously, CFTC coming out early on, identifying, and the SEC as well, identifying Bitcoin and Ether, two of the largest market cap coins, as commodities. And given the way that the US system is set up, where commodities and securities are regulated differently, the CFTC is a critical stakeholder. And we also have Janet Yellen now at Treasury, Gary Gensler at the SEC, of course, and Michael Mosier, who's the acting director of FinCEN. And these are all key regulatory players for crypto. Sort of a common thread, obviously, these are different people with different perspectives that they bring, but a common thread that is likely, we think, to run through the administration and leadership is a focus on financial access and inclusion, which is something that Monica touched on. So, we're optimistic that there will be, an appetite for innovation from folks and regulators that have that area of focus, but also an emphasis on consumer and investor protection, which can sometimes, if wielded in a way that's not thoughtful, can stifle innovation. So hopefully that won't happen. I really liked the way that, Peter, you framed your approach to MiCA and looking at crypto regulation in Europe as looking at the best practices of the responsible players and industry players and sort of codifying those so that that it's something that's practical, that's right-sized. Obviously, we very much welcome that approach as a responsible industry player, and we hope to see some of that from the U.S. regulators, and I think that the Biden administration always has a lot on their plate, so this may not happen overnight. And just like Peter, you talked about the complexity of getting multiple member states on board with and implementing an EU-wide framework. The similar challenges are present in the U.S. system. So just briefly on, and I can to talk in greater detail about any of these folks, but Gensler at the SEC is, of course, crypto and blockchain savvy. Actually taught a class at MIT on blockchain, has for many years, and has a strong focus on investor protection. So we'll see how that plays out. But we anticipate that he and his team will look for ways to further enhance the integrity of the underlying crypto markets to prevent fraud and manipulation. And we hope to bring clarity on what crypto tokens constitute securities, like how do you make that determination? And Commissioner Peirce, who recently spoke, obviously introduced a safe harbor, sort of an idea or framework for doing that. While allowing innovation to happen. And then finally, to provide further clarity on how digital assets and technologies flow through other securities laws. For example, how do you become a custodian for a securities token? How do you, custody securities tokens as a broker dealer? And can ETFs be approved, et cetera? So that's sort of what we're anticipating out of the SEC. Out of the CFTC, it's a little bit hard to know at this point because we don't have a permanent director, though acting director Benham has been, or acting chair Benham has been a thoughtful partner in our dealings with him to date. I think one of the things that we would really like to see out of all regulators, but in particular the CFTC, is sort of a continuation of their forward-leaning pro-innovation approach, because the CFTC was a leader in terms of providing that regulatory clarity. And as you see, the CME is offering crypto futures and options. And I think that's very important because these types of, if we look at some crypto assets as sort of stores of value, as opposed to as payment instruments, these futures and options really foster the kind of price discovery and other aspects that a mature market and those assets requires. So there's this movement to create sort of casino style crypto derivatives offshore that are not investor protective, and we would submit are not particularly helpful in fostering trust and maturity in the asset class. So if the CFTC can work with industry to create ways to offer some of those more novel products, but not all the way to these casino type products, in addition to the more plain vanilla futures and options that the CME is offering, we think that'll be really very helpful. And then there's a whole host of other things. There's a House bill that was passed, I think, just last week. Yeah. It's a bipartisan legislation that calls for a formalized cross-agency and stakeholder working group on crypto issues that would be co-led by the SEC and the CFTC. The future of that bill, I think, in the Senate is unclear, but it's, I think, very encouraging to us that there's evidence of ongoing and bipartisan interest in driving that greater clarity. And I think that that's very helpful in terms of maintaining the US's competitiveness when it comes to regulating these assets. You see legislation coming out of Singapore, coming out of the EU, as Peter just touched on, and we do want to continue to be at the forefront of innovation.
Yes. Oh, thank you. That's a wonderful overview, Sydney. Thank you so much for that, because I think everybody is sort of watching what's going to happen in the U.S., given the explosion of the industry, certainly in the U.S., but also these new players coming in. And yes, last week, the House of Representatives did introduce that bill. I find the title very interesting, Eliminate Barriers to Innovation. So for those who think it might take a couple of years to get our framework together, I believe they were trying to set a 1-year timeline to get a recommendation. So it's nice to see one or two things where there's actually bipartisan support in this country. And I think the fact that there is a desire to move on this is very interesting. And a lot of people will say that's driven in part by the desire to have the US play catch up around a central bank digital currency. And I want to come back to that. So let's just put a hold on that now. But that's super interesting. And I really appreciate your sort of tour d'horizon on that as to who the new players are. Henri, we're coming to you last, but certainly not because you're least important. We're delighted to have you here. You have a great position in the industry as well. You've been watching it very closely for years, not only in your capacity as global head of crypto at PwC, but you've written a number of books on the industry. You teach about the industry in Hong Kong. Sitting in Asia gives you another lens. But let's talk about some of the things we haven't touched on yet. I mean, one of the things, I think somebody might have alluded to it, but clearly one of the issues that regulators have mentioned is the whole nefarious, potentially, aspect of crypto, and that it can facilitate money laundering or illicit transactions. I mean, from your perspective, do you see a lot of this? I mean, what is fact and fiction around this? And you also, in your last book, you wrote about AI. I don't know if AI plays a role in this or can play a role in this, but can you comment on this?
Absolutely. First of all, thanks for having me, and very good to be back with the OMFIF family. Thanks but also for your listeners for spending the time to share our passions of the future of finance with all of you. I think, obviously, that the idea of obviously having nefarious actors in the crypto space is one that is on top of the agenda of not only regulators, but also policymakers as well. I think this is one area I think we need to take a step back and look at the data as well. I would argue, obviously, if you look at some of the top crypto exchanges in the world, and many of them are on the panel today, I'm ready to bet that many of them have better KYC, AML, counterterrorism financing and monitoring than many of the traditional banks. Frankly, I think that's something we don't have to acknowledge, that a lot of crypto exchanges in the industry, out of goodwill the last couple of years, really took a step forward in trying to be best in class. Also, if you look at the data in the industry today, according to one of the recent research reports that came out on the topic, only 0.34% of crypto transactions are linked to illicit transactions. To put this in absolute terms, it's about $10 billion. Again, if I put this in a traditional financial space, as we know, according to the UN today, the average amount of money laundered around the world is equivalent of 2 to 5% of global GDP. That's $800 billion to $2 trillion. right? So again, like I always say, have jokingly, if you want to do something illegal, you use good old cash or use the banking system. That's probably a better chance of going through the cracks right now. This being said, I think we have to acknowledge as a crypto ecosystem, as a community, that there are still areas of the crypto ecosystem where any bad actor could actually potentially do some nefarious activity. For example, one of them that is under the radar, I think Sydney alluded to them, is a number of unregulated exchanges around the world, right? Again, there's a number of exchanges around the world who really play in that gray area. To be fair for them, that has been a very profitable area to be in the gray area for the last couple of years. And this is obviously creates not only unfair competition, but in a certain extent may give a bad name to the industry. Anybody in the crypto industry, I think you were alluding to Patricia earlier, crypto industry was probably the only industry in recent years lobbying for more regulations. And because we wanted this clarity and this level playing field that we wanted from that perspective, I think it's what's going to be interesting on this particular area. What I'm watching over the next couple of weeks and months is really what's going to happen with, for example, on DeFi, decentralized finance, that Tom touched upon, right? I mean, it's very good to have centralized exchanges that are regulated, but I can tell you right now in some DeFi exchanges, for example, really volumes are as much, if not very close to centralized exchange volumes as well. So if you're right now a bad actor, frankly, you'd be stupid to go trade on a centralized exchange. You're probably better off going to a DeFi or use any of these OTC or offshore exchanges on that perspective. So I think that's one thing to understand from that perspective. But really, bottom line is really, there's from a criminal activity perspective, laundering and all these bad actor criminal activities, there's definitely less activity in crypto than people believe. And I would say what bothers me from an intellectual perspective, even academic perspective, is that often this is the excuse used not necessarily by regulators. Actually, I think regulators and central banks often do not get the credit for all the good work they've done in the space. I think for many of the regulators listening, have to say the average regulator that I speak with is way more knowledgeable than the average financial services professional. I would actually say this is the excuse used by many of the traditional banks. Today, as you guys know, and this is in the public domain, many of the banks will close accounts of any company that is dealing with crypto. One of the big banks today, this week, banned clients from trading companies, publicly listed companies that are linked to crypto. Right? And many of them, by the way, if you try to make one transaction to any of the exchanges, even many of them that are on the panel today, they will close your account immediately. I think this is an excuse that many of the banks have been using, which is quite unfair, actually. And I think this is a bit of it shows, I don't know if it's a lack of education or a willingness to kind of try to stop and put barriers to crypto adoption. That's definitely something that I'm watching over the next couple of months as well.
Yeah, no, that's great to hear. And I think while we're just on this subject, I mean, Peter touched on some of the overall risks that crypto may present. It's interesting to see what are the risks that may be out there for crypto. In other words, are there risks to the industry growing, the use growing? I suppose if we continued with lack of regulatory clarity, that's a big risk. Some financial luminaries have even said crypto is going to get outlawed or banned. We heard Ray Dalio and Jim Rogers talk about this. But it seems like the regulators are trying to move forward in a very thoughtful way. But are there other risks to the industry? We didn't really talk about cyber. I mean, I know cyber crime is out there, every industry is struggling with it. Do you have any thoughts on that? Is that a particularly, potent area for crypto?
Of course, there's a lot of risk, and maybe unlike Peter, actually, I sometimes stay up in the middle of the night because there's some risks that are there. For example, cyber is one that exchanges were hacked, are being hacked, and will continue to be hacked. Frankly, if you're a hacker today and you're not targeting crypto exchanges, I mean, you're an idiot, right? These are honeypots waiting to be hacked. Thankfully, though, for a lot of exchanges right now, I mean, as you can see the data, again, every year there's less and less exchanges being hacked because exchanges have been quite good now. And from not only cold storage and hot storage, but really a lot of procedures and controls that are in place. Today, many of the exchanges you see are not only ISO certified, they have SOC 1, SOC 2 certifications. So really, I think the caliber, the level of exchanges right now at the tier 1 level is actually very, very strong. So I wouldn't worry too much about it. I think one of the things that I'm always worried about is the human risk. At the end of the day, we forget a lot of these exchanges. There's a human element. This is why having these internal frameworks, governance, controls, and actually having even these independent reviews to a certain extent, can have a big role. What you're referring to, some of the black swan risk, or the tail risk, you mentioned Ray Dalio's from Bridgewater comment that he made a couple of months ago in his one of his comments on Bitcoin being potentially banned. I think many of us forget in the investor community. I have a lot of white hair, but maybe I'm not as old as, unfortunately, as maybe people will believe. In the US, as we know, gold was banned after FDR came in the 1930s until 1970s. for US investors, investing in gold was actually not possible, was illegal. So many people believe that as if we're seeing an increase of users move from, move their cash, especially with the rounds of QE going on and other risks that your viewers at the OMFIF know very well, if there's a risk of currency devaluation, inflation, hyperinflation, and users go to Bitcoin as being a better version of gold, could there be a risk of ban? I think many would argue it's probably easier to tax it than actually ban it. In 2021, frankly, banning Bitcoin is I think it's a great try, but I think we've practically very, very difficult. But I think this is something that's happening. I mean, we saw many countries right now. I think many of your listeners today are very lucky to be in countries where they trust the central banks. They're all good OMFIF members. They trust their authorities. But I think if today you're in a country like Lebanon, where the banks have been what had been, or Turkey 2 weeks ago, where the president was encouraging people to sell their gold to buy the currency, I think you can see how many people will be drawn to Bitcoin. And that is exactly what we're seeing. Just using Turkey example, there's record levels today of Google searches on Bitcoin, and exchanges as well have been through some rock and roll times the last couple of days. And I think these are some of the risks that as a community we're watching. All I can say, as a crypto ecosystem, there's a lot of efforts within the community. There's a lot of working groups and actually efforts from different parts of the ecosystem to solve these issues. And I have to say, I think we have to acknowledge that the crypto ecosystem has come a long way. If you think about the last 3-4 years of where we were and where we are, and frankly, where we're heading as well, I think that's a very good, not only for the future of money, but also the future of finance as well.
Yeah, absolutely. And all of you are a testament to that in the work that you're doing about the ecosystem. I want to go back for a second to central bank digital currencies. This symposium actually has focused a lot on that. And we are seeing a lot of interesting developments. I think there's over 80 central banks that are currently exploring projects. Certainly in the US, there's been a slow movement in that direction. We've got the Boston Fed doing a digital prototype dollar project with MIT. China has obviously already rolled out in a digital currency. So there's a lot in the pipeline. What I'd be interested in every one of your thoughts about how will digital currencies exist with crypto? Will they exist side by side? Will they have different uses? One's going to be payment, one's going to be an investment asset. How do you see it unfolding? And is there space for both of them? So maybe we can start with Tom. Let's just go back around in order. What's your thinking?
Oh, that is a great question. And I'll be really, really candid and honest here. I don't know what the outcome of this is going to be. And I think it's actually one of the fascinating things about this space is that there are so many people innovating, from central banks to private industry to existing big banks and stock exchanges. And everyone is addressing their customers and their needs in a different way. And I think that the needs of the customers of central banks are a little bit different than the needs of small retail payment processors. And I think there's room across the entire space for this technology to fill lots of different needs. And it's one of the things I love about it is that people can, as they dip their toe into the water, they come into the system, they find what works for them, whether it's DeFi or centralized exchanges or big banks and institutionals using the central bank digital currency. So I think that all these assets are going to be able to exist together, and that there's going to be the proper niches and use cases for all of these different things. But I'm very, very curious to see how it grows and how it turns out. So it's going to be a very interesting one to watch.
Yeah. Monica?
Yeah, it's a great question. We see a future similar to Tom of coexistence of all different types of crypto assets, central bank digital currencies, independent and decentralized digital currencies, as well as new types of tokenized assets. And I think the role between crypto and CBDCs is CBDCs will solve domestic for example domestic payment use cases. Still, though, there will need to be a way for CBDC currencies and systems to interact. So you have to still solve for cross-border. And I think that's the opportunity for crypto. Actually, that's something that in RippleX, we're starting to work with central banks on is interoperability use cases where they use XRP as the settlement asset between CBDCs. So yes, that's our point of view.
Great. Peter?
Well, I think much will depend on the design choices that are made on central bank digital currency. So what role it will play will depend on the choices of central banks and policymakers in how they structure it. But what is already clear, irrespective of the design choices, is that central bank digital currency will be currency. And what that means is it will be a means of exchange, it will be a store of value, and it will be a unit of account. And these are the three features of a currency. And while we currently have about 9,000 or so crypto assets or cryptocurrencies in existence, none of them have really been able to score on the three characteristics of currency. Some of them are a means of exchange, but are not really a store of value, or they're not a unit of account. And so what I think will happen is that if there is a central bank digital currency issued, that it will end up occupying a good deal of the space that a number of cryptocurrency initiatives are trying to occupy right now. For as long as central banks don't occupy that space, someone else may try to occupy it. But if a serious and significant central bank puts forward a central bank digital currency, they will end up occupying that space. And I think they will push private initiatives away because it will be public money and will come with the credibility and the advantages that public money offers.
But hopefully some of the private players can adjust and adapt and refine whatever the product is they're offering to complement that.
Indeed, and they will be offering services to it as well.
Yeah.
So
exactly. Sydney?
We wouldn't be having this discussion, obviously, if not for Bitcoin and other cryptocurrencies that have become really popular and have demonstrated the potential that tokenization, blockchains, and automation can bring to the space. So I think that's important to recognize. And I agree with my fellow panelists, all the observations. Obviously, CBDC is quite different from Bitcoin, for example. It's a fiat currency, as Peter pointed out. It's not the use cases and the evolution of the products offered in that format will be very different from those offered by Bitcoin, for example, which is a commodity, and sort of the payment applications associated with central bank digital currency are much more straightforward, though perhaps the store of value use cases associated with Bitcoin are more appealing, particularly as economic conditions change. So it'll be very, very interesting to see how it evolves. And I do believe there's an opportunity for coexistence. And I think it's hard to see the developments around CBDC as being anything but a tailwind for the digital asset industry and ecosystem as a whole, and sort of the ultimate validator of the technology.
Exactly. Henri, unfortunately, we just have a minute left, but I know you talk fast, so I'm very interested in your view.
Well, my show is called The Crypto Capsule in 60 Seconds, so we'll try to do that and that. No, absolutely. I think it's all love is in the air in the crypto space. I think all these things will coexist. Also depends, the most important is where you live. I mean, stable coins, we discussed today with DM earlier in this conference, cross-border payments today, the average share of cross-border payment is 7%, which is frankly insulting in 2021. So some of these corridor stable coins will play a big role. CBDC as well as certain countries and regions, Asia right now, by far, we're seeing the most advanced project on retail CBDC, wholesale CBDC. I'm expecting a big debates there on privacy as we move to the West in some of these countries. And I would say Bitcoin, again, depends on geographical reasons, some of the reasons I mentioned earlier, as people say, as a store of value, as a hedge against inflation, as something as an asset they could hold, so on and so forth. I think so really not only asset type, but also region-wise, there'll be some nuances, which is what you should expect.
Great. And I think to Monica's point, at the end of the day, we also have to figure out how all these CBDCs are going to work together, how you're going to have cross-border. But as you all have said, there's room for everything. We are unfortunately coming to the end of our time, but I want to thank all of you panelists very, very much. You were really fantastic, and I think offered great perspectives to what's really a critical discussion today about where is crypto going. I think your comments clearly point in a direction that it's here to stay. It's evolving, and it's a space to watch and to hopefully contribute to based on all the work that you've done. For our audience, I'd like to thank you too. I'd also like to encourage you to stay tuned. We have a great discussion coming up with Michael Novogratz, who is the CEO of Galaxy Digital, in 15 minutes. He's going to talk about the institutionalization of crypto and whether it is in fact the birth of a separate and new asset class. So thank you guys very much for being here, and look forward to another opportunity to see where we get to in the next phase of crypto. Thank you.
Thanks for having us.
Thanks, Patricia.
Okay, bye.